Hi, I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, today, a very quiet day all over the CME. We had FX, rate, energy volatility basically flat on the day, offset by equity and gold vol, which continues to climb just a little bit higher on the day. But we're one day away from the election. Everybody's just waiting to see what's going to happen. And really, volatility is giving a lot of mixed signals on the election outcome tomorrow. Let's place this all in context. Last week, index vols, when you put all the indexes together, the Dow, NASDAQ, S&P 500, index vols actually fell and now are sitting in the 17th percentile as judged over the last 5 years. Term structure made a parallel shift downward last week, not to be surprised with earnings in the rearview mirror now. Skew, that's something that's really important and caught a lot of people by surprise. Skew went from the 39th percentile down to the 16th percentile, even with that late afternoon drop-off we had on Friday. G7 FX vols, when you combine them in the average, they fell down to 6.6% on average last week. Most vols fell every day last week. Now, energy vol, when you combine everything together, 1 month vol was up about 1 point. Gold volatility, 1 month vol last week was up 1.5 vols last week. But let's talk about contagion or correlation. What was driving volatility last week and what's driving it right now? Right now, it seems like it continues to be sovereign debt and oil. Whatever happens to the volatility in those asset classes seems to spill over more than anything else when looked at all the asset classes at the CME. When you look at what gained the most, what lost the most, oil added about 15% to its contagion risk last week. Sovereign debt added about 3%. Conversely, FX and gold both lost about 7%. So even though gold volatility rose last week, it had less of an impact than usual with volatility in terms of how it spilled over to the rest of the asset classes. Lastly, one of the most important things or most peculiar things that's going on, 24 hours away from the election, is really the difference in volatility surface in FX vols. Now, for those of you who don't know, volatility surface is basically a 3D look combining skew with term structure. Right now, it's very interesting. You have British pound vol surface very, very flat. On the other hand, you have euro currency vol surface at a 2-year high. Compared that also with Japanese yen, which is also very steep. But right now, European or euro currency vol surface is 2 times higher than even Japanese yen vol surface on a volatility adjusted basis. So I think what we're saying by that, or what I'm saying by that, is that even though the consensus might be talking about Obama winning the election tomorrow, volatility is saying something quite different. It's a logjam. It's a dead even election right now. So we'll see tomorrow. Right now, vols are flat. Everybody's just waiting. Everybody's on edge. Nobody knows what to do. Volatility might be telling a different story, and I guess we'll find out tomorrow. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago.